Welcome to your Mortgage Insider Update for this week, the Fed week for December. Will be our last Fed meeting of the year. Federal Reserve is widely expected to hold rates steady, but the all-important press conference on Wednesday afternoon will set the stage for future rate cuts potentially. There's no guarantee that the Fed will cut rates in the next 12 months, but Wall Street is betting. So let's take a look and see what charts are doing. The 10-year Treasury, our major benchmark, has been down pretty substantially, but leveled off. So let's take a look.
As we start for Monday, the 10-year Treasury up 1 basis point in anticipation of the Fed meeting at 4.25%. It was not too long ago we saw interest rates of 5% on the 10-year Treasury. That's 0.75% drop. So we found ourselves in kind of a wide range after just a steady drop down. Since November the 3rd, just a steady movement. Now that we're in the month of December, we've made it below the 100-day average. We see the 25-day average start to lower in its curve, and it's going to meet the 100-day average. Over time, this will just create a further and further benchmark to hopefully continue to see this curve go lower for interest rates. When we look at mortgage-backed securities, those security prices are up 12 basis points. Higher is a positive. Green is good as the price has actually hit the 200-day average. We've crested that right at the end of November. We see the prices have basically stayed pretty steady, so that's representative of about a week of steady interest rates after same time period since early November, late October, just a steady climb in the price to the mortgage-backed security, meaning interest rates have improved that whole time. When we take a 6-month look back of mortgage-backed security prices on this particular coupon, we can see August of 2023, since we last breached this area, we were basically worse off. Interest rates, or the price was lower, meaning interest rates were higher for consumers ever since early August. So any buyers that have been on the sidelines since August and felt like interest rates were too high, now's their opportunity to get back to better interest rates in relative terms to this year.
So better interest rates are all relative to your point of view. Best interest rates since August does not interpret into the best interest rates in an environment where many people have been really put off by the cost of housing, cost of prices of homes, and cost of mortgage interest. But we do see light at the end of the tunnel. This week we'll be paying close attention to the Federal Reserve's comments. We will get the Consumer Price Index just before the Federal Reserve meeting. And also Producer Price Index. So those are major inflation items this week that will weigh on the Fed's decision, likely to hold interest rates steady. As they hold interest rates steady, the futures market will start to really anticipate when's the next Fed move. Will that be a Fed cut sometime next year? Some of the early bets say by May, but I feel like by December for sure, we're going to see substantial changes to the federal funds rate as we see continual inflation coming lower. Unless there's some kind of major change, we have seen gas prices come down. Oil overall has come down. That's going to take a lot of pressure off of inflation, and that will put pressure on the Fed to reverse course after their record-breaking rate hikes to get them into hopefully up to 100 basis points or 1% lower in federal funds by this time next year would be a huge improvement. It would definitely give us the confidence for buyers to come out and purchase homes and potentially unlock some of that inventory from sellers locked into really low interest rates. Make it a great week, and we'll talk to you next week with updates from the Federal Reserve.